Good morning and welcome to this Wednesday, June 30th, 2021 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at earningsbeats.com, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Got a special show today. I'm going to get into that in just a minute. I'm going to try and set some kind of a world record, maybe. I don't know, looking at some charts, but I'll get into that in just a minute. First, I want to just make sure that everyone is aware. If you are new to Earnings Beats and you go over to earningsbeats.com, we do have a free newsletter, Earnings Beats Digest. We like to get as many folks into our community as possible. We do a lot of free events and so forth, and this is really your ticket to many of those free events. This is the group we reach out to. But it's a newsletter we publish 3 times a week, Mondays, Wednesdays, and Fridays. It's completely free, 100%, no credit card required. Really easy. Just simply type in your name, email address, hit the subscribe button, and you're good to go. Also, we do portfolios. You can see the portfolios obviously rebounding this quarter. We had a rough quarter last quarter, but the since inception results I think are still really powerful. How we've done since we started versus the S&P 500. So if you'd like to check that out, we do have a no-cost 30-day trial that you can click on that join today. All right, let's get into first what happened on Tuesday. We had the Dow Jones Industrial Average up 9 points, so relatively flat. The S&P 500 up 1, again, relatively flat. Nasdaq leading on a relative basis a bit, up 27 points, continuing to extend into record high territory, as is the S&P 500, by the way. 4291 now, almost 4,300 on the S&P. We were above that level, 4,300 for the first time ever on Tuesday. Mid cap, small cap struggling lately on a relative basis. You can see they're off their earlier highs. So these two groups have both struggled. I think some of that has to do with a lot of small caps being in energy and materials, and we've seen those groups getting hit a little bit recently, especially materials. Moving on to those sectors, technology, another big day yesterday. Technology breaking out, continuing to move higher into record high territory. And I think the key here is we're moving toward earnings season, and this is typical. This is what the stock market does. Technology and discretionary stocks historically do much better than the rest of the market heading toward earnings season, and they're starting to do it again. Technology for sure. We haven't seen the breakout yet on discretionary, but discretionary stocks have been strengthening. We've got to get through those highs that we saw in the last few months. Healthcare also moving to a new high again yesterday, up slightly on the day for Tuesday. Utilities and communication services, excuse me, these were the two groups that were hit the hardest. You can see a little difference in their chart, though. Utilities, which is a defensive sector, back down near its multi-month low. Communication services, however, had just set an all-time high, and we saw a little bit of profit taking in that group, but those were the two that underperformed. The 10-year Treasury yield, let's get an update here and see exactly where we are this morning, because we gapped down. Yeah, we're trying to recover here a little bit. We're down almost 2 basis points today, 1.46%. That may create a difficult environment once again for the banks and for financials. This 10-year Treasury yield really has been downtrending for the past 6-7 weeks since we hit that high about 170 the second week of May. That was right when we were getting all of those big inflation reports. Everyone really concerned about inflation. A lot of articles, a lot of news stories about inflation. Since then, yields going back down. That tells me inflation's really not the problem. And that's good news for the growth stocks, which have been doing much better. As I mentioned earlier, the technology stocks really starting to kick it into gear again. Let's see here. This morning, we did have the June ADP employment report out. 692, excuse me, get some water here. Let's try this again. June ADP employment report, 692,000 versus 550. So that came in better than expected. We did revise May lower. from 978,000 to 886,000. So the net was just a little positive, 142,000 beating in the current month, but then lowering by almost 100,000 in the prior month. June Chicago PMI expected to come in at 71. May was 75.2, so looking for a slight pullback there. May pending home sales. April was down 4.4%. I was actually thinking we might see a positive number in May, but that too was down, but down less than 1%. It was down 0.8%. And then on Friday, we got the big one coming out, June non-farm payrolls. The estimate right now, 675,000. And for comparison purposes, May was 559,000. So we are looking for a similar jump above the prior month. Or actually, no, we didn't have a jump above the prior month in the ADP employment. But we did beat estimates by 140,000 this morning on the ADP employment. So with 675,000 expected in the non-farm payrolls on Friday, we'll see whether or not we can beat that number. But that's going to be the big economic report for this week, not just for the stock market, but also for the bond market. So looking at these yields. All right, so I've got almost 24 minutes to get till the opening bell, and I am going to try to go through the Nasdaq 100. I've done the Dow 30 before in about 10 minutes. So the Nasdaq 100 in about 24 minutes would probably set a record. I don't know if I can get through all 100 or not, but I'm going to give you a shot. What I'm going to do, I'll show you Apple here. So on this chart, I've got the PPO. This is a daily chart, by the way, going back a year. So I've got the PPO. I've got the price chart. I've got volume. I've got Apple relative to its industry group. So all the stocks will be shown relative to their industry group. And then their industry group relative to the S&P 500. Just got it all in one chart. And I'm just going to give you some really quick, the price chart's not big enough where I can really focus in on too many price targets, but I am going to try to go through and just tell you whether I like the stock, don't like the stock, do I think it's bullish, bearish, whatever, and a quick reason why. So 100 stocks starting now. So we got Apple currently $136, trying to get through this April level. I think the PPO is moving, relative strength picking up. We've got earnings coming up. I see Apple going higher. Adobe has just recently broken out on earnings. I think it's one of the stronger software stocks right now. I like it on a pullback. Analog devices making a breakout also, but look at that relative to the semiconductors going down. I like the stock. I like other semiconductors better. ADP continuing to rise, but you can see the relative strength versus software has been moving lower. Relative to the S&P 500, though, it's moving higher. I'm just kind of neutral on this one right now. Autodesk starting to strengthen. This is in software as well. It's coming off a 52-week relative low. So as long as this continues to move up, I'm okay, but it does have to try and get through that 300 level. American Electric Power, not a big fan. I mean, this is in the utilities area, and it's been downtrending. Not a big fan of utilities. I'm going to pass. Align Technologies, sideways consolidating after an advance. We've been sideways consolidating for a while. The stock is still a leader in medical supplies. We just need to get medical supplies going. I like the stock, but need a breakout here. Alexion Pharmaceuticals continuing to rise. This is a pretty strong biotech. It's been one of the leaders. I like it, especially as long as it continues to trend above its 20-day moving average. Applied Materials, still one of my favorite semiconductor stocks. It's been sideways consolidating relative to its peers. It's also sideways consolidating on its chart. I think this is a very bullish pattern. Watch for a breakout above 145. I think Applied Materials could have another run in it. Advanced Micro Devices beginning to strengthen. I really liked what's going on here with AMD. It had been a real laggard in the semiconductors for a while, starting to turn back up. I think this one goes higher. Watch that 20-day for entry. Amgen, I tell you, I think the pollen or whatever we've got going on, my allergies are going to be my biggest challenge here. Anyhow, Amgen sideways consolidating, trying to get through the 260 level. We'll see whether or not we can do it. Look at it relative to the biotechs right now, 52-week low. I'd pass on it for now. Amazon, I think Amazon's in a pre-earnings run. It got up to 3,500 above that, trying to get through major resistance level, pulled back, but right now holding that 20-day moving average. I think we're going to get a breakout. It's just so-so on the relative strength, but on a breakout, I would be a buyer of Amazon. ANSS, ANSYS, a lot of sideways consolidation. Look at the relative weakness, not interested here. ASM Holding. This is actually a pretty good semiconductor stock. And you can see recently was at a 52-week high. It's been trending higher relative to its peers. I think this one's going to break out again. I like ANSYS. Activision Blizzard, ATVI, sideways consolidation after this gap, but it's now been 5 months. I think as long as we hold this area down around 88 or so, we're okay. I like maybe entry around 88. Otherwise, I would probably just be a holder, avoid it. AVGO, this is Broadcom, sideways consolidation. We had huge relative strength. This whole period of consolidation, we've been losing that strength. We need a breakout. Baidu has been downtrending for a while, but it has just started to turn back up. I think this could be the start of an uptrend. Watch that rising 20-day for a bounce. Biogen, BIIB, huge move back just a little over a month ago on an Alzheimer drug. But I don't know, this whole pullback here, I don't know how far it's going to go back. I would think it should start to bounce again pretty soon, but maybe it makes its way all the way back down close to 300 first. Booking Holdings, many of the travel stocks still struggling a little bit. You can see travel versus the S&P down the last few months. Booking trying to hold on to a key support around 2150. And historically, this stock likes the first 5 months of the year. And we're getting ready to go into the 7th month of the year. So seasonality may play a role there as well. Be careful. Cadence Design, CDNS, sideways consolidation, weakness on a relative basis, though, so I'm going to pass. CDW, relative strength recently at its high, and now I think it's putting in a cup, starting to turn back up again. I think CDW looks pretty good here. I would be a buyer on any weakness to the 20-day. Cerner Corp, CERN, really hasn't been very strong since it topped back in January. It was really starting to move on a relative basis and then completely fell apart. And it has remained near 52-week relative low. So I'm going to pass there. Checkpoint Software, CHKP, sideways consolidation, but really way off the highs, 52-week relative low versus software. I like a lot of others better. Charter Communications just recently broke out again. Relative strength looking pretty good. I'm okay with this one. I like it on a 20-day test. Comcast sideways consolidating after a move up relative to its peers. It's been doing pretty well, but its peers have not been doing very well. So it's a good stock within a not so great area. Barring a breakout here, I'd probably pass. Costco Wholesale, big move up, just broke out. Could use a little bit more volume on this breakout, but I really like the chart, like the relative strength. Costco looks good to me. Copart CPRT, also long-term consolidation, just broke out, just starting to show strength. I like taking chances on stocks like this. I think we could have a new leader emerging. CPRT is one I like. Cisco, sideways consolidating here, pulling back. I think it's okay. Don't want to lose about 50 to 51. That's an area of support I would watch. If we lose that, I'd be out of it. Otherwise, I don't know. It's just not really showing a whole lot of relative strength. CSX Railroad's really been a struggle of late. CSX back down near recent lows, and it's been failing in its 20-day moving average. That's not really what you want to see in an uptrending market. Cintas, a lot of sideways consolidation. I like it on this breakout. I think this may have been one of our earnings beats digest stocks recently, but I like the breakout. I think it goes higher. CTSH, this is Cognizant Technology Solutions, big gap down back in early May, continuing to trend lower, relative strength horrible, I would pass. Dollar Tree, pretty much same thing, trending lower down near, 6-7 month price low and at a 52-week relative low. If you're not already picking up on things, I like relative strength. I like to see stocks that are starting to outperform. DocuSign, I think this one looks really good. The key is trying to get through this September high, but I like the money coming back into it. I like the relative strength picking up. We might see a little hesitation here. Maybe a 20-day test would be a good entry point for DocuSign. Dexcom been strengthening again versus its medical supplies peers. You can see trying to move to about a 7 or 8 month relative high versus those industry peers, but we need to get the industry going. So the stock's got some overhead resistance. Breakthrough 460 would be bullish. Electronic Arts, sideways consolidation right now. Got to get through 150. Relative weakness, 52-week relative low. Starting to show a little strength, but we got to get through 150 before I'd consider it. eBay just recently breaking out. I like what's going on here. Nice relative strength. I think this one is really strengthening, looking good. I'd be a buyer of eBay, especially on a pullback. Exelon recently got the breakout, but look at that, failed on both the breakout level and the 20-day moving average, and did it on volume to the downside. That always bothers me. It's a good solid stock within utilities, but again, I'm not a huge utility fan in a raging secular bull market, so I'm not going to take another look at that one. Fastenal recently set a high back in May, but even when it was breaking out, it was really being carried higher by industrial suppliers. The overall group was strengthening, and that's why the stock did well relative to its group, not performing that well. I think there are others that are stronger. Facebook did just recently break out. I think Facebook looks good. Internet stocks have been doing very well. I think this one is certainly a player on a pullback to the 20-day. Fiserv downtrending below the 20-day, relative strength horrible. I'm going to pass. Fox Corp, big move up here in March, relative leader. Since then, just been trading in this very narrow range. And again, it's in that broadcasting area that has not been very good. I'm going to pass. Gilead Sciences, one thing you got to know about biotechs, they love the month of July. So if you can find some of those, I think Alexion, I was showing you earlier, that's a strong one. Amgen, not so strong. Gilead, not so strong either. Needs to break out above $70 and just hasn't been able to do it. Google, great stock. I love the stock. It has been sideways consolidating here, trying to get a breakthrough. If it can get through 2,500, look for that relative strength to pick up. But this has been a good stock in a very good area. IDEX Labs, IDXX, the medical supply company, and you can see this is a leader. No doubt relative to the medical supplies volume, pretty solid as it continues to trend higher. Any pullback, I would be a buyer of that stock. Illumina, huge move back in February. This is versus the biotech, so it was a leader back in February. This has been an extended cup, and actually probably comes down too deep to even be considered a cup. But big area of resistance, no doubt, is up just over $500. Got to get through that level. Insight, INCY, been downtrending. Price-wise, down near a 52-week low. Enough said. I'm getting out of that one. Intel, when I say getting out of it, I'm just leaving the chart. I don't own it. Intel made a move back in April, but this has been one of the weakest semiconductor stocks. Pays a nice dividend, probably great long-term, but short-term, no thank you. Intuit, really nice breakout versus software and also on its chart. I like Intuit. I think this one goes higher. Intuitive Surgical really starting to make a move here to the upside. I don't know if you've noticed medical equipment just breaking out. Here's one of your leaders. I like Intuitive Surgical going forward. JD.com, been downtrending, but I think it's broken the downtrend. I think we're starting to see a move to the upside. I said earlier, it's great if you can catch these stocks when they just begin to lead. This one's starting to show higher high, higher low, and now just recently, last couple of days, another new higher high. So this is one I think you want to keep on your radar. I think it could be starting an uptrend. KDP, this is Keurig Dr. Pepper, leading through early June, but we did have this setback with heavy volume. I don't know. I've got some overhead resistance with gaps and so forth. I'd probably pass on that one for now. KHC Kraft Heinz, big move up relative to food products, was doing pretty well, has pulled back, now trending below the 20. And you can see that death cross the 20 below the 50. I'm going to pass there. KLA, I just think there are other semiconductors that are better in its space. Applied Materials is one. Lam Research is another. I'm going to pass on KLA because I think there are other stocks that look better. Not that that's a bad stock. Here is Lam Research, and you can see just a month ago it was at a 52-week high relative to the semiconductor peers, and it is just trying to get through what looks to me to be an ascending triangle. I believe we're going to get a breakout. I do like Lam Research. Lululemon, I think, is one that has definitely started to strengthen. Look at the relative strength. After months of going lower, last 2 months, it's now starting to strengthen versus clothing and accessories. It's broken out above the April high. I think it's trending higher. I like Lululemon. Marriott, sideways consolidation, a little bit of downtrend. Relative strength, not that great. I'm going to pass on this one. Microchip, MCHP, sideways consolidation. It was a leader back in February when it set this high. But throughout all this consolidation, it's lost a lot of relative strength. It's now 7 8 months at a relative low, looking over these last 7 or 8 months. I just think this one needs some more work. I was a fan of the stock a few months ago. I'm not so much right now. It's got to get that breakout. Let's get through about 165. MDLZ, Mondelez. I don't know if I'm pronouncing that right. But anyway, big move up. Had a 52-week high. You can see the relative strength is strong, but it's strong versus a very weak food products group. So it's one of the strongest stocks in a weak area of the market. I'm okay trading it. I'd probably just be careful, make sure I keep my stops tight. Mercado Libre, MELI, starting to strengthen, relative strength starting to pick up, good volume as it came through the moving averages. I think it needs to get through the 1650 area. Got a little work to do to get there. Monster Beverage just has not been a good performer after setting a high and a relative high back in April. See the big gap down. The good news, hollow candle on that gap down. So could be accumulation there. Watch this 88 level. As long as that holds, I'm okay with it. But you can see it just hasn't been showing relative strength in the group. Soft drinks has been very weak. Moderna, one of my favorite stocks in this pharmaceutical area. I think of it more as a biotech. But anyway, the breakout here above 225, I think is bullish, and I think the stock's going higher. Marvell Technology, MRVL, just made the breakout. You can see it move up, hesitate right near this high at about $55. Well, it just made the breakout. Volume started to tick up, relative strength looking good. Until proven otherwise, I think you got one of the leaders in semiconductors there. Microsoft just broke out, starting to turn back up on a relative basis. Just, very stable, great long-term performer. I'm okay with Microsoft. Match Group, MTCH, got to get through the 171, 172 area of relative strength picking up. So if we can get that breakout, that would be a lot more bullish. Micron Technology was a leader back into early March, and then we tried to break out, couldn't, saw relative strength weaken, and then price action weakened. Micron was one of my favorite stocks about 4 months ago. I really thought it was going to continue to go. I was wrong. It continued to move back down, and it's been the relative weakness has been horrible. I'll pass on it for now. Maxim Integrated Products, MXIM. This one relative to the semiconductors was setting a 52-week high recently. Just moved to a new high. I think this one looks pretty good. Water break. Netflix. I think Netflix is starting to make a run. I liked when it got back through the lower gap resistance area around 515, 517. I think it's now trending higher. See, we've got that golden cross, the 20 above the 50. PPO starting to turn up. It's not been doing well relative to the internets, but internets have been very strong. So if it starts to catch fire, this is certainly a stock that you want to keep an eye on. NetEase, not as much a fan here. Sideways consolidation. It has moved back up. Volume picking up. I think if it can get through 120, I'd probably maybe take another look at that point. But this one, just like Netflix, been a weak performer relative to internet stocks. NVIDIA, I don't know what else to say about this stock. This has been probably one of the best semiconductor stocks. Look at the volume coming in to support this move. Wall Street's accumulating, and they're doing it for one reason, because the stock is worthy. NVIDIA, I think, continues to go higher. I like the stock. I think it's one of the best stocks in the Nasdaq 100. NXP Semiconductor, sideways consolidation. Need to get this breakout. You can see relative strength has weakened since we've been consolidating. But if we can get a breakthrough about 215, I think NXPI could be ready to run again. OKTA was one of the best performing software stocks for a while. Last several months, though, not so much. Can it get through 250? That's where we had this gap down. We failed there once before. Let's see if we can get through 250, but the right now relative weakness keeps me out of the stock. Got to see a little bit more out of this one. O'Reilly, I'm a fan of. This is a nice move up, beautiful cup. Like this volume coming in on the right side of the cup. A handle, if we can get a handle back to that 20-day moving average, I would be a buyer. I think this is a really nice looking stock. Very strong versus its peers. And the group looks like it's starting to strengthen as well. Paychex. Just broke out above the June high, you can see, so making a new high. Volume picked up on that move. Starting, software starting to show some strength. Paychex has just been, kind of just going along for the ride with software. So I like the stock. I think there are others better than Paychex. All right, PCAR, Paycar. After putting in this double top back in January, it's really been weak. Relative weakness is pretty apparent. I'm going to pass on it. Pinduoduo, PDD. I think this one is starting to turn back up. I like that volume yesterday. One candle doesn't make a move, but it's been going down. It just looks like it's getting this rounded bottom. If we get back through 140, especially 150, I think this one is going to be well on its way to the upside. I'd keep an eye on this one. I do like what's taking place in the very near term. Pepsi moving up, looking good relative to soft drinks, but soft drinks have been horrible. So I'm going to pass there. Peloton I own. I actually like the move that it made back here, getting back above the moving averages. I think the stock just cleared 125, which is a pretty important resistance area. And I just think it's trending back to the upside. You can see the relative strength versus the recreational products. So I think Peloton's going to go higher. Watch that rising 20-day for support. PayPal, very similar. It too has broken back out, trending above its 20-day, showing relative strength. Watch that 20-day. I'd be a buyer on the 20-day. Qualcomm also just recently beginning to show strength, but it has been mired in this downtrend. Couldn't get through what set it high back around 145 in April, and that's the high that we really need to clear before I'd be more interested here. Relative strength starting to pick up, but we got to get that breakout. Regeneron Pharmaceuticals, also in the biotech space, trending higher. You can see the top here in January around 560, and then the recent one around 570. Got to get through that level. Watch that rising 20-day for support. Ross Stores, this is a great long-term performer, but I'm not impressed with this relative weakness versus retail apparel retailers. So I'm going to pass on Ross Stores for now. Starbucks, I like the stock. It's sideways consolidating. Restaurants have not been doing well. Starbucks is actually holding its own relative to the restaurants. So I do think we're going to get a move to the upside, but right now it's just sideways consolidating. CGen, SGEN, starting to show a little bit of strength, but it's been a underperformer now for many months. I'm going to pass on this one for now. Sirius XM Holdings did make this breakout and pulled back. I would have thought it would have held the 20-day. It did not, went below, starting to turn back up. I'd be careful if the stock broke below 620. Otherwise, if you wanted to give it a shot on an aggressive play, this would be one maybe to consider. SNPS Synopsys, big move up, topping in February. A lot of sideways consolidation, but we are starting to trend higher again. I'd be okay. I'd like to see this one relative to software break above this 0.054 level. Splunk, SPLK, downtrending. I like this gap up. I think this is a breakaway gap, which is changing the direction of the trend. I think Splunk is on its way up. I'd be a buyer. Skyworks Solutions, SWKS, love this move that it's making here over the last few days. The relative strength turning up. It does have a lot of competition, though, in the semiconductor space. There are others I like better. Watch to see if we can get this breakout. I wouldn't buy it just below the breakout level. I'd like to see that breakout. Ctrip.com, TCOM, big move up, topping in March, but it has been downtrending for the last 3 months. Relative strength turned lower. I'm looking elsewhere. Atlassian just made a breakout and showed some relative strength versus software. Volume came in. I think this sideways consolidation or pullback is an opportunity. I think the stock, if it were to get back to about 253, which is right near that 20-day EMA, I would be a buyer for sure. T-Mobile, TMUS, been going up. Relative strength looks good. I'm fine with T-Mobile. I think this one looks good. Not a huge mover, but I think the stock looks pretty strong. Tesla, I actually think is starting to strengthen again. Automobiles relative to the S&P set a low back in May, and it's starting to turn up, and Tesla's starting to turn up relative to its peers. And now we're getting that golden cross where the 20-day is just crossed back above the 50-day. You can see we struggled. We got up, couldn't quite, keep that move, and then rolled back over. So that's going to be a key. Can we continue the trend and keep that 20-day above the 50-day? But I do like Tesla. I actually own Tesla. Texas Instruments, sideways consolidation. I like the semiconductor group overall, but you can see, look at the relative strength falling apart during this consolidation period. Let's get the breakout. And then if the volume confirms, maybe take another look at that one later. For Risk Analytics, VRSK, down near 52-week low. Enough said. Not interested there. VeriSign has been moving higher after months and months of consolidation. I think it's pretty clear this one's trending higher. Does need to get a breakout here versus its peers. Its peers have been strengthening. So if we can get a breakout versus the peers, I think that would add to the bullish case there. Vertex Pharmaceuticals, gap down in June, rallying back to the 20-day. Got some work to do to get through 200. Walgreens Boots Alliance, WBA, sideways consolidation. Needs to hold 50. If it doesn't hold 50, I'd be out. It's doing okay relative to its peers, but its peers just aren't very strong versus the S&P. Workday, sideways consolidation, relative strength, horrible. I'm going to pass. Excel Energy rolling over, now trending below its 20-day moving average. Not a very exciting stock there. Xilinx starting to strengthen here, breaking back up above that 140 level, but it is coming out of the seller versus the semiconductor group, so I'd be careful. Zoom Video, one of my favorite stocks, has been for a while. I thought that all the selling was overdone. It made a huge move early on to get to that almost 600 level. I think the downtrend has ended. I think this stock is now trending higher. I do own it. Stock is trying to get back through 400. Market just opened, by the way. So I didn't quite get it in, everything in by 9:30, but getting very close. But I do like Zoom, especially on a 20-day test, and that's it. Got through 100 of them in about 20 minutes, maybe just a little over 20 minutes. So it wasn't too bad. Anyhow, that is going to wrap up today's show. I appreciate you tuning in. Hopefully you could follow through all those charts. And I will be back tomorrow for your next Trading Places Live. It is a recorded version that will air on Stock Charts TV at 9 a.m. tomorrow. Hopefully you'll be able to tune that in. But the next live show will be next Monday. Want to wish everybody a great rest of your week. Enjoy your Thursday, Friday, your weekend. It's a holiday weekend, by the way. So actually, I won't be back on Monday because Monday's a holiday. Markets are closed. So it will be Tuesday, and I'll be back for a recorded version over at Stock Charts on Tuesday. Anyhow, everybody enjoy your long weekend. Be safe and happy trading.